Good afternoon, ladies and gentlemen, and welcome to the Wentworth Resources 2021 Interim Results Investor Presentation. Throughout this presentation, investors will be in listen-only mode. Questions are encouraged and can be submitted at any time using the Q&A tab situated on the right-hand corner of your screen. Just please simply type in your question and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company will review all questions submitted today and publish responses where it is appropriate to do so. These will be available via your Investor Meet Company dashboard and will notify you by email when they are ready for your review. I'd also like to remind you that this presentation is being recorded. Before we begin, we would like to submit the following poll, and if you'd be so kind to give that your attention, we would be most grateful. And I'd now like to hand over to Catherine Rowe, CEO from Wentworth Resources. Good afternoon.
Good afternoon. Thank you very much, Mark, and good afternoon to everybody. I really appreciate those of you who've chosen to dial in and listen to our interim results presentation today. We published our first half interim results earlier this morning, and I welcome the opportunity to give you a little bit more detail about this as we go through the presentation. As Mark says, there will be an opportunity for Q&A after the presentation, and obviously I will do my best to answer any questions that you may have. I'm going to take you through the presentation. I'm going to take my camera off so the slides are slightly bigger for you, and then I'll come back on when we have a discussion towards the end. So as I mentioned, we announced early this morning our first half for this year results, and I'm pleased to say they're the strongest set of financial results that we've ever released in our corporate history, and just underpins the strength and robust delivery of our business, and we'll be talking about that in a little bit more detail in this presentation. So I'll just start with an overview of those stronger fundamentals that I mentioned. This is a record set of results for us, and we really think that this delivers shareholder returns following that high gas demand that we've seen in the first half that's really driven that operational outperformance. For those of you who aren't aware, we are a Tanzania-focused business. We have a single asset, Manazi Bay, in the southern part of Tanzania. It is gas producing purely for domestic purpose. We are a domestic natural gas producer, and it's a really important asset for the country and obviously for us, as we look to help the government of Tanzania increase their access to energy for all citizens and try to reach that universal access target that they're aiming for by 2030. Our asset generates 30% of Tanzania's total power through our gas production with our partners in Manazi Bay. So we are a meaningful and critical part of the energy mix in Tanzania. And we have a new Tanzanian government that's really looking afresh at the sector and the entire industrialization and development of Tanzania's economy, and really trying to encourage more direct foreign investment and more international business to support the development and industrialization of the economy. So that's a broader contextual picture, if you like, of Tanzania, the landscape in which we operate, and how we fit in as a meaningful part of that. So looking more specifically at Manazi Bay, our core asset, we have production averages for the first half of 80 million cubic feet per day. That is the strongest first half we've ever been able to deliver, and it is at the top end of our already increased full year guidance of 70 to 80 million cubic feet per day. We increased guidance in June with our AGM, and it was previously 65 to 75, so we have increased that given that strong performance in the first half. We reiterate that guidance today, and we feel comfortable that is the appropriate guidance range at this stage. We have 5 wells in Manazi Bay, and they are performing incredibly well. We've been able to increase capacity from those existing wells, as well as increase capacity with the production facilities, and that's what's enabled us to achieve those all-time highs from the field in the first quarter of this year, where we were able to produce volumes in excess of 110 million cubic feet per day. And because our OPEX, our operational costs, are largely fixed, we're seeing reduced OPEX per MCF as largely as a consequence of those higher volumes that we're able to drive, but also through some cost efficiencies that we've been able to achieve through some of the workover program that we have continued to do even throughout 2020 and 21, when a lot of E&P companies were looking to reduce their CapEx budgets. We stuck to our work programs, and that's really helped to drive down those costs that you see here, down 72% to now under 50 cents per MCF. And we reiterate our 2P reserves. We estimate those to be 90.8 BCF as per our year-end reserves report, and that remains unchanged today. So that operational performance is what's driving the financial strength that we're delighted to be able to report today. We have an increase of revenues by 40% from the first half of 2020. And we have first half revenues of 2021 of nearly $12 million. We continue to be debt free, continue with that free cash flow generation, and announce today that we have $21 million of cash. It's that level of cash generation that supports our progressive dividend policy, and we've been able to deliver on that progressive policy again today by declaring an interim dividend of $1.32 million, which is up 10% from the first half of last year. So really pleased that we're able to deliver and commit to that progressive policy that we put in place. And also part of that reason is the continued payment from our key stakeholders. TPDC have a strong track record now with us for continually paying in full on time with all gas sales invoices, and that has continued. It's continued throughout COVID, and it's continued throughout the course of this year. So we're very pleased with that. Also worth noting that our relationship goes from strength to strength with TANESCO. They have now settled over half of the arrears that we had with them. This is a smaller contract we have with them. It's not the material contract we have with TPDC, so it's smaller outstanding arrears, but really good to have those a payment plan in place. And as it says here, we actually received over half of the outstanding balance in August. So real demonstration of their commitment to make whole on their current balance. And I think that really does go to show that there is this commitment from the Tanzanian government to keep those payments regular, to keep the business working, and to support us as we look to continue to support Tanzania. It's all very much working in the right direction. So that is us in an overview. We are committed to Tanzania. We are a key part of how they're going to move the country forward, and the fact that we can support that and grow alongside in a low carbon way makes our business very robust for the future. So just moving on, I'm just going to touch on some of those financial and operational highlights a little bit further. This slide really tries to focus on the core parts of our business that really mean how we do business. Prioritizing health and safety is absolutely at the core of how we achieve our business success. We've been very fortunate that we've had no operational disruption due to COVID. 2020 was a difficult year for everybody, but we maintained performance at the asset throughout last year, well into this year, and that's continuing as we speak. So, very pleased with that. Real key milestone for us too is that we celebrated earlier in August, a month ago, we celebrated 5 years with 0 lost time incidents. So, meaningful production started when we were recording our lost time incident data, and it's a real achievement that all of the partners in Manazi Bay are proud of. The interim dividend I touched on, again, 10% increase from H1 last year. We've returned over $5 million to shareholders in the last 12 months, which we think is incredible, really, given that we've had COVID, we've had a lot of global macro uncertainty. We also are a single asset, and we are operating in a jurisdiction that has some perceived political instability but we've demonstrated that our business is strong, robust, and the fact that it can support this very credible and sustainable dividend policy. The revenue growth we've talked about, record levels of production at Manazi Bay, and delighted to be able to talk to you today about that revenue growth. Also delighted that we're able to talk about that due to the increased volumes, again, which we've talked about, 80 million cubic feet per day this first half, relative to 58 in the first half of 2020. And as I mentioned, there's a focus on profitability, there's a focus on cost efficiencies, there's a focus on trying to ensure that we have the healthiest margin possible. And so we have been able to increase our EBITDAX by 75% to $7 million. And that's really partly driven also by that reduction in operational costs that you see there. 72% reduction in costs is an impressive metric. So we're robust, we're strong, and we look forward to delivering more and more performance to create that value, not only for shareholders, we're hugely grateful for our supportive shareholders, but also for those government stakeholders that actually make our business the strength it is today. So just moving on, record production of Manazi Bay. What's driving this? Where's this demand rise coming from? Well, we have seen a post-COVID recovery that's certainly helped from some of the shocks of last year. So we are seeing some of that demand coming through that recovery, and we're also very much seeing tangible industrialization of Tanzania's economy. There are several key large infrastructure projects that are currently under construction in Tanzania in a move towards industrializing the economy, moving it away from that traditional agricultural base, and all of that is obviously going to drive more energy demand and place more pressure on the ability for supply to meet that demand, and we're well positioned to be able to supply into that growing demand. We've talked about all-time production, political shifts in Tanzania. We do have a new government, very proactive towards getting through COVID and managing in a COVID environment, very proactive towards encouraging international investment, and specifically encouraging the energy sector and ensuring that there's a future for all Tanzania citizens and with access to energy. And that operational delivery leads into our financial strength. We have a really good quality functioning asset, and it's the asset that's at the heart of all of this, and that's what's able to enable us to be as financially strong, to record those high revenues, to continue the dividend, to ensure that we keep that fiscal discipline, and to generate our cash. And all of that is part of a package of relationships with our key stakeholders. We've worked hard with TANESCO to reach an agreement that's suitable for both parties for their arrears. We have a fantastic relationship with TPDC as our off-taker, but also our partner in Manazi Bay. For those of you who don't know, we are the only onshore gas PSA in Tanzania where TPDC is a partner. Makes a huge difference to us. We actually genuinely work with them as a partner, not just as a government body or as an off-taker. They're very much aligned with how we are going to look to optimize the asset, which I will come back to in a little bit more detail. And the dividend, really key for our shareholders. We are fiscally disciplined, we are committed to that dividend, and we'd like to think that committing to this progressive policy not only demonstrates our confidence in the asset, but our confidence in Tanzania as a place to do business, and our confidence in the ability to manage this business to sustain that dividend. Slide 9, we tend to show this just as a direction of travel, just for those of you who are not aware of some of the history, how this business has been transformed over the last few years. We have built up production since production started into the main pipeline in 2015. You can see there production has has increased since we started. We've been able to build the cash, repay our debt. We are now debt free, and also drive down those operating costs as we talked about earlier. And we're always looking at costs. We're always looking at cost efficiencies and a way to ensure that G&A is at the right level as well. So, we would expect that to fall in 2021 as well. The dividend, I've talked about this, but it's really, really a differentiator for Wentworth. We're only one of 7 London-listed E&P companies. We are the smallest one with only a single asset. And it's highly, highly unique to have a business like this that's capable of sustaining that progressive policy, even throughout COVID, even through the global economic uncertainty that we've all been living with now for a year and a half. So we're incredibly proud to be able to support that, and that dividend will be paid by the end of October to our shareholders. And obviously we'll be looking forward to our final dividend for the year, depending on our performance for the first half, but we have indicated a 1/3, 2/3 split. So I think that covers a lot of the operational and financial highlights that we announced this morning. I'll just spend a few moments on a corporate update. We've had a few changes at our board level over the last couple of months, and just worth recapping on some of that. I will say that this is very, very much in planning. A lot of these changes are the outcome of years of planning, how best to refresh and transition the board, and we've done it in a very organised and planned way. So as part of that planning, we're delighted to announce Juliette Karuki as a new independent non-executive director in July. Juliette joins us with a huge amount of Tanzania-specific experience, and has already very much got up to speed with how our business is viewed and our reputation in country. So we're delighted to have her appointed. Bob retired as chairman at the AGM after 11 years, but we were keen to find a role where Bob can continue to support the company. It's been a great position that we've been able to include Bob, whilst ensure that our board moves on and adheres to as strict governance as possible. So with that in mind, Tim Bushell was appointed non-executive chairman. Tim joined our board 2.5 years ago as deputy chairman with the view to taking on the chair role upon Bob's retirement. So as I say, that was very much as part of the planned succession. And John Bentley will be retiring at the end of this year due to his long tenure with the company, hugely important part of our team, but he will be retiring at the end of this year, and we will look to refresh with an appointment of an additional non-executive director. So we have a refreshed but hugely experienced, and we're a very small team, work very closely together. So we will refresh the board in absolutely the right way going forward, but with a lot of that hard work, as you can see, has already been done. I think what makes us unique, this slide leveraging our strengths, this really starts now to talk about the future going forward. Where do we see the growth, and also what makes us different, what makes us unique. Wentworth is a bit different. We are the only single asset E&P in a jurisdiction like Tanzania that can deliver the results that we're delivering, and also that dividend in a very clean corporate structure, in a transparent way, whilst also ensuring that ESG and sustainability is absolutely the core of what we do. So what is it about us? And I think just a few points on this slide really that I would like to draw your attention to. It's really, as I said before, it's really testament to the quality of the asset, which is why we're in the place that we are today. So how do we optimize that asset? How do we make sure that we get the most out of that asset? And it's partly through optimizing production, through those work programs and cost efficiencies. We stuck to our CapEx and our work program last year when lots of other companies were scaling back, cutting their programs. We stuck to our work program, and that's enabled us to deliver higher volumes and lower costs. So we're really committed, and I'm really pleased that we stuck through that last year and into this year. Part of that work program is to continue monitoring the field. This field has really only been in production materially since 2015, and we've got much more data now, and that feeds into much better communications about what we do with the asset going forward, and when we look for additional development wells, additional exploration, and compression, which is our next big capex project. So that's a really key part, and we've been doing that very well over the last couple of years. And we are partnering with the government. As I say before, we are the only asset with TPDC as a key partner in our license, and that means that we can talk to them about what their aspirations are, how they need to see the growth in demand, and have the supply meet that. So that's really key for us, and the fact that we can do it in a low carbon way to support that energy mix in a transitional energy world in which we all live is really important to us. But we will look for other opportunities too, and we'll perhaps come on to this a bit more, but there's a lot more optimization within Manazi Bay, and then there's a lot more opportunity to support Tanzania more broadly outside the existing asset. So I mentioned sustainability because it really is at the core of what we do, and this is not us paying lip service to ESG, to sustainability. It's absolutely fundamental to the Wentworth strategy. We are a key part of powering Tanzania's growth. We are, as we mentioned earlier, supplying 30% of all power generation, and the fact that we can bring people out of energy poverty, provide them with a better standard of living, and enable them to reach their full potential within their country is what motivates us. We want to deliver affordable, reliable energy, and allow families to access that electricity. That's why we say 4 times more rural villages have access to electricity in 2020 compared to 2015. That's why they're spending 5 times less since the switch to natural gas. It's all about increasing that access to energy for people to bring them out of poverty, and we're doing it in a low carbon way. You can see here some of the statistics. These are all from our sustainability report that's available on our website. It was published in April this year, and a lot of reporting of data and transparency. So you can see that we are displacing heavy fuel alternatives to natural gas, and therefore having a positive impact environmentally. But it is a journey. Just on this slide, we did a huge amount of work for our inaugural sustainability report. Hugely proud of that. It's not just nice words and pictures. There's a lot of data mining that went on to ensure that we're compliant with SASB, which are the disclosure standards to which we adhere. We are moving forward with that journey. It isn't just one time only, it evolves, and we're now looking at our next priorities for this year, which is really to start developing a climate strategy to assure that we have not only measurement but also mitigation. And we're working on some projects at the moment which we'll be able to share in more detail once they're further advanced, but they'll also be in our 2021 sustainability report. So you'll be able to see just how we're making a positive impact even more and more. And we recently participated in the UN's Target Gender Equality Programme. It's really important to us. Not only are we an active member of the UN Global Compact, but particularly gender equality is something that we feel strongly about here at Wentworth. One of our flagship programmes with our Wentworth Africa Foundation, our charitable foundation, is Keep a Girl in School, to promote female education and to promote gender equality. So that is something that also drives us and has real tangible benefits and outcomes in the developing world. Talk about environmental performance. I put this in just as a snapshot from our sustainability report. As I said, we did publish our scope 1 and 2 emissions. We already have a very low emissions profile. We're very fortunate. Manazi Bay gas is sweet and dry. We have more than 98% methane, so very little sulfur, and low levels of condensate. So we're very fortunate in the fundamentals of our asset, but we are looking at how we can continue to reduce that. There's pressure on all of us to ensure that we are a part of the energy transition and we're not going to get left behind. And that's important to us, it's important to our shareholders, and we will continue to focus on that as a priority. And as I say, for this year's ESG strategy, climate strategy is the key core focus. So the outlook for this year, it does remain robust. We're pleased with our guidance. We're not changing that today. We're comfortable that what was the appropriate guidance for the full year. We've had a great first half. We now need to have a great second half. That is focusing on delivering over the next few months before the end of the year, and seeing hopefully some of those key drivers here on the right hand side coming through in the demand, seeing some of those new industrial customers being connected, seeing that Mtwara power plant expanded, seeing the Canarsia 1 extension power station being commissioned. These are the drivers, not just for this second half of 2021, but going forward. These are the sort of near-term drivers for increased demand from our current levels. So that's really what we're focused on right now. There will be growth, there will be the right growth opportunities within our asset, but also beyond our existing asset. I will say that it's all about timing. We have to be at the right time to make sure that we capitalize on our strong position and execute on opportunities at the right time. But there's a lot of opportunity in Tanzania. It's developing very quickly. It has ambitions to be the East Africa energy hub, and we believe absolutely that it can deliver that. The next decade for Tanzania will be hugely exciting, and we're delighted to be a part of it. So I think hopefully that sums up what we've announced this morning, where we're going with our business, how proud we are that we're able to give that dividend to shareholders, and I'm very happy to take some questions.
Catherine, thank you so much indeed for updating investors this afternoon. Ladies and gentlemen, please do continue to submit your questions using the Q&A tab situated on the right-hand corner of your screen. Just while the company take a few moments to review investor questions submitted already, I'd like to remind you that a recording of this presentation, along with a copy of the slides and the published Q&A, can be accessed via your Investor Meet Company dashboard, and we'll let you know by email when that's ready for your review. I'd also like to remind you that your feedback is important to the company, and immediately after this presentation has ended, you'll be redirected for the opportunity to provide feedback in order that the company can better understand your views and expectations. Catherine, obviously investors have been submitting questions throughout your presentation, and firstly, thank you to everybody that's taken the time to submit the questions. The first one, Catherine, if I may, is from Graham, who asks, how have operational costs fallen so enormously?
Well, thank you, Graham, for asking the question. Yes, it is a dramatic fall. So good question. Largely due to the fact that OPEX is fixed. So as volumes increase, the cost per MCF falls. So that largely explains it. But also we have done some workover on our two of our wells that have allowed us to actually produce from those wells in a lower cost. So there's some cost efficiencies, but really I would say that the biggest driver is that you're seeing those increased volumes as a direct consequence of that.
Thank you, Catherine. Next question really relates to Manazi Bay. A question from Andy. Do you see demand for Manazi Bay growing, and are you well placed to meet any spikes in demand?
Yeah, thanks very much for the question, Andy. Yes, we do see demand growing. So we have a contract with TPDC for up to 130 million cubic feet per day. So we have contracted volumes up to that level, and beyond that would require another contract. We think that the existing 5 wells are capable, more than capable, of sustaining production above 100 million. They have gone north to 110, as we talked about. In order to go beyond that, we would probably need an additional development well in the field. So we do see it growing, and we do see that we're immediately well placed to supply into that growing demand, as I say, up to around 100, 110 million on a sustained basis. Anything above that, as I say, would require additional work in the field. But in terms of spikes, very flexible. We're able to adjust volumes daily. If we needed to deliver 20% more tomorrow, we could, without any additional capex. It's very flexible in that perspective. So yes, we do see demand growing, and we're absolutely perfectly placed. And actually, we are the sort of swing supplier of choice for any spikes should they occur in demand.
Thanks, Catherine. I might join these two questions that we've had in from Sebastian and Simon. The first one reads, please can you explain why you need $21 million and growing on the balance sheet, and what plans do you have for this? And Simon asks, would you consider looking at any new assets given the robust position of the company?
Great. Well, thank you for the questions. Really good questions again. We are conscious that this business is now capable of generating high levels of cash, and we are building that cash on the balance sheet. Clearly, the most important thing, two most important things, I guess, is one is that dividend policy. We didn't put that policy in place thinking that it would just be a nice sort of lump here and there. It's very much designed to be long-term, sustainable, and progressive. And so it's important that we maintain sufficient liquidity to enable us to model the demand, the dividend going forward. We have a model out to 2031, and we want to ensure that progressive dividend continues throughout that whole time. So that's part of it. The other part is financial flexibility and financial liquidity to run our business. Obviously, we do need a little bit of that as well. We are a single asset, single offtake business. So we have one asset selling to one customer. And so, we do need protection should anything go wrong. And clearly there's a buffer required in order to enable us to run the business. Going beyond that, there is cash available for opportunistic growth opportunities. And we want to ensure that any cash we use is done in a way that actually does make an accretive difference and drive value for shareholders. That is something that a lot of companies haven't done. We are not in the business of hoarding the cash just for the sake of it. We do want to find a way to use it that can deliver value. But it's only really now that we're in a robust position that allows us to be able to capitalize on opportunities as they arise. So it's important to maintain a certain level of balance sheet strength so that you can move quickly should an opportunity come about. I'm sorry, I think the last part of that, Mark, sorry if I didn't address it, would we consider looking at new assets? Absolutely. Absolutely, yes, we would. We are committed to Tanzania. We feel very strongly about how well one can do business in Tanzania given our position. But there may be opportunities that fit our strategy. What that means is we look at what we're good at. We're good at monetizing domestic gas to power. This asset was stranded. We've got it on stream. We're producing, and we're producing profitably with a healthy margin. So that's what we're good at. We're good at relationships with the government. We're good at leveraging those relationships to have a successful, profitable business. And we know Africa. We have Africa experience. We understand how to navigate our way around Africa. So yeah, should opportunities come about that fit some of that criteria, we would certainly look at them.
That's great. Thank you, Catherine.
It's helpful to have another asset in one's portfolio, whether it's another gas asset or another jurisdiction. So yeah.
Thanks, Catherine. Next question reads as follows: when will the next reserve report be published? Do you anticipate any upgrade on volumes?
Thanks. We do an annual reserves report. We do one every year. So the next report will be available in January 2022, and that'll be to the year end December 21. We do that in conjunction with our operator Moral and Prom. Upgrading reserves really comes from additional drilling, finding additional reserves. So that's not on the cards for this year. But as I say, all the data for the performance of the reservoir is very strong, and so I don't see any material changes coming, but we haven't started that exercise yet. Typically we start that in September, October.
Thank you. The next question comes from Ingelmarth. Thank you very much indeed for the question. First half revenues of 11.6 included 1.2 from pay from 2020 as gas deliveries were below the ACQ. And for avoidance of doubt, annual contract quantity. What level is ACQ for 2021? And can you also explain why revenue adjusted for TOP is lower than what should be expected based on deliveries from the first half of 21? So quite a lot in there for you. I'll leave it up there for you to pick out the bits that you need to respond to.
Thanks, Mark, and thanks, Ingemar, to you for taking the time to join us today. The take or pay is calculated on a retrospective annual basis, as you know, I think. So yes, obviously our first half revenue included the take or pay from last year, which again is quite a milestone point, because we invoiced Moral and Prom invoiced for the take or pay, and that actually was received, which is the first time that's happened. We haven't disclosed the ACQ for this year, and obviously at the end of this year we will be looking at volumes as a whole and then working out the take or pay. So we internally can track our volumes year to date, and therefore we can track how far away or how above we are the take or pay level, and then at the end of the year that's calculated annually, and so you would expect to see that information in the year-end results.
That's great. Thank you very much indeed. We've got a question here from Anders, and forgive me if I pronounce this wrong. When do you expect Canarsia extension and expansion at Manazi Bay to be operational?
Thanks, Mark. Yeah, Canarsia, not particularly easy. So Canarsia 1 extension it is a power plant in the Canarsia complex just south of Dar es Salaam. We currently supply to Canarsia 1 and to Canarsia 2, and Canarsia 1 is an extension of an expansion of Canarsia 1, obviously. So we don't. It is ready to be commissioned. It's fully constructed and it's ready to be commissioned. We don't see that being commissioned in a material way this year. We think that will be into next year. So we don't have that in our forecast guidance for this year. I think realistically you need to see Canarsia 1 and Canarsia 2 plateauing at near capacity before that Canarsia 1 extension can come on stream. And of course, you have to also consider that the distribution and transmission capability has to be there to be able to evacuate that power. So the good news is it's ready to go. We do see it coming on stream. It will take some time to commission. Typically these power stations commission over a period of sort of 4 to 6 months and build up in the demand. But we expect that to come through next year as we're seeing these levels of demand continuing to increase.
Thank you very much, Catherine. I think there are perhaps some other questions. I think obviously we've got a few that are quite long in nature that perhaps might be better responded after the meeting. And of course, all the questions submitted today by investors will be reviewed, obviously by you, Catherine, and we'll publish those responses back out. But obviously, in the interest of time, and I know we were scheduled for an hour, but I know we're 45 minutes with the commitment to another meeting. So I just wondered, Catherine, if I could perhaps just hand back to you just for a few closing comments, and then I'll redirect investors to give feedback. And then obviously, as I've said, all the Q&A will be published back to the investors as soon as we've managed to present that back to you.
That's great. Thank you very much, Mark. Really appreciate that. Really appreciate feedback from shareholders. If you can please bear to take the time after this, that's really valuable for us. Really delighted with today's results. This business goes from strength to strength, and I'm proud of what we've achieved, and I'm proud of what I think we can deliver going forward. thank you very much for the support from shareholders. As you know, I really enjoy doing this Investor Meet company platform with Mark and allow you the opportunity to listen and to ask questions, but I'm always available, and as Mark says, we will address the questions that we haven't got round to today in more detail. So do keep in touch. Thanks for the continued support. I hope the dividend has gone down well today, and we'll continue to keep you updated.
Catherine, thank you once again for updating investors today. Ladies and gentlemen, please could I ask you not to close your session, as you'll now be automatically redirected for the opportunity to provide your feedback in order that the management team can better understand your views and expectations. This will only take a few moments to complete, but I'm sure will be greatly valued by the company. On behalf of the management team of Wentworth Resources, we'd like to thank you for attending today's presentation. That now concludes today's session, and good afternoon to you all.